Hello, um, MBA 503 students, and this is the last of the videos on job order costing. I said MBA 503, I meant MBA 510, I'm teaching both. Anyway, so hello MBA 510, this is the last of the videos on job order costing. Now this one's going to be probably a little longer than the others, a little more technical, but it brings everything together. So let's go back to the worksheet that we've been building. Okay, so on the last worksheet, we had built a statement of cost of goods manufactured with a bottom line of 387.5, and then we had built also an income statement with a bottom line of 238.5. Okay, now the purpose of this statement is to give you a general idea. There's always, whenever I do any of the examples, there's always different ways to do this. There's always a little bit of adjustment you have to make. This should give you the general idea of what the book is talking about. Okay, and this is basically how costs flow through the T accounts of a factory. And so here's what we're going to do. We're going to start. Let's see if this thing can catch up here. Okay, we're going to start by emphasizing two things. One are something called job cost cards. Now this is a job order system. And let's say these could be cars. These could be cars. Let's say there's 4 cars in the job order system. 1, 0, 1, 2, and 3. Okay, and let's assume, so there's 4 different cars. Let's say they're Rolls Royces or some very custom product. Okay, so if you go across, these are the costs, where it says total costs here. These are the costs of each job. So job 0, total costs to complete the thing, 55,000. Job 1, total cost 128.5, job 2, 175, job 3, 32. So those are the total costs by job. Now, if you go to the totals along the bottom, this is the total cost by job product cost type. So for direct materials, 120,500. Okay, now these two are for direct labor. We've got direct labor hours of 900, and I guess they're paying $100 an hour, $90,000. Okay, now this is applied manufacturing overhead. And I kind of hinted at this the last time. And notice that it's twice direct labor dollars. And what we do in accounting is, in this type of accounting, is that rather than putting into the job order cost system, rather than putting in there the actual manufacturing overhead, because there's so many different types, it's hard to put in all these different types of overhead. We estimate it, which is called applying it. The application of overhead is really an estimation of overhead. And then at the end of the period, we adjust cost of goods sold for the over or under applied overhead. So for the part of overhead, we compare the actual with the estimate, and then we make an adjustment in the account for that. So we've got 3 costs: total cost, total direct materials 125, 20,500. Total direct labor 90,000. Applied manufacturing overhead 180, and it's applied at twice the labor dollars is what we're applying it at. So your total costs are 390,500. A couple of assumptions. I'm going to assume that job 0 is in your beginning work in process. So I'm going to make the assumption that job 0 is in your beginning work in process. And I'm going to assume that job 3 is in your ending work in process. Ending work in process, job 3. Okay, so let's go down and see how these costs flow. Now you'll notice that I have 3 accounts. I have one for raw materials, another one for direct labor, and I have another one for manufacturing overhead. So those are basically the 3 costs that go into a manufacturing process. We're going to make a small adjustment for raw materials. Okay, and then we go into work in process. This you could think of this as the assembly line. So we're going to have inventory, beginning balance in the work in process inventory, but we're going to add to that, from these 3 accounts, we're going to add to that direct materials, direct labor, and our applied manufacturing overhead. Then finally, once the products come off the assembly line, they go into finished goods, and ultimately they go into cost of goods sold, which is on your income statement. Okay, now let's start by looking at our three inventories here. You have three inventories: raw materials, work in process, and finished goods inventory. Okay, so let's go ahead and put in the beginning and ending balances in each one of these accounts. Okay, so for raw materials, and you can pull them from anywhere, but I'm going to go ahead and pull them from the statement of cost of goods manufactured in order, and the income statement in order to make sure these numbers come out right. Okay, so my beginning balance in raw materials is 9,000. The ending balance in raw materials, I'm just going to go up here, is 11,000. I'm going to change that to a negative. I'm going to change that to a negative to make it a positive, of all things. Okay, then work in process. My beginning balance in work in process is, let's see, beginning balance in work in process is $10,000. So my beginning balance work in process is 10,000. And by the way, it's not by coincidence that that 10,000 is equal to that 10,000 in direct materials in job zero. My assumption is that the company had put in $10,000 of raw materials into process at the end of last period, and they needed to add some direct labor and manufacturing overhead to finish that job. So that's not by coincidence. That is, like I said, your beginning work in process. Okay, and then your ending work in process. Let's see what your ending work in process is. Your ending work in process is equal to, and I'm going to take it from my statement of cost of goods manufactured again. 32,000 is your ending work in process. And then finally, I'm going to go over here to finished goods inventory. And finished goods inventory, your beginning work in process, or excuse me, your beginning balance in finished goods inventory, this will be on the income statement actually. It moves over to the income statement by then, is 69,000. I'm going to go ahead and shrink myself here to give myself more space. And then your ending work in process, excuse me, your ending finished goods inventory will be 175,000, which is that number right there. Make it a negative, so it becomes a positive there. So it's 175,000. That's where you start. You got to put your inventory balances in. Now what we're going to do is we're going to do what I call original entries, and there's 3 original entries, and they're each of these original entries. Let's back up, make sure the mic's working. Okay, and so each of these original entries, as I call them, are the entries you make in order to pay your vendors, your raw materials vendors, your labor, and all your manufacturing overhead vendors. Okay, so the first entry I'm going to make here, we'll call it entry 1, is your purchases of raw materials. Okay, so I'll make sure the mic's working. Okay, so your purchases of raw materials are going to be equal to purchase of raw materials. I'm just going to go ahead and do this. Your purchases of raw materials are right here on the statement of cost of goods manufactured. And I'm just assuming you're paying cash. I don't care about cash. I'm just care about the accounts that are in the costing system right now. Now, your payroll consists of 2 things. It consists of direct labor of 80,000, indirect labor of 54,500. Okay, so your direct labor, I'm just going to go up here to the statement of cost of goods manufactured, because I know that I've got $80,000 of labor right there. And your indirect labor, which is really part of manufacturing overhead, by the way, is going to be your payroll is right there, 54,500. So your total labor costs are 80,000 plus 54,500, or 134,500. Okay, now your manufacturing overhead, and this is your actual. This is going to be your actual manufacturing overhead. And your actual manufacturing overhead, let's get all the cost in here first. First, you've got rent on the factory building. And I'm just going to go up here. Statement of cost of goods manufactured, and you've got rent on the factory building of 80,000. They're not necessarily in order volume. Okay, and then your utilities on the factory are 8,000. So we come up here, and your utilities on the factory are 8,000. Then your maintenance on the factory equipment. So we come up here, the maintenance on the factory equipment is 20,000. And then your depreciation on the factory is, let's see what we get here. Your depreciation on the factory is $30,000. And then your security on the factory, this is really the security alarm, not security people. Your security on the factory, the alarm that you paid for, is $15,000, I believe. Right there. Okay, and now I've got two credits. One is accumulated depreciation, and let's just do this one. You've got depreciation on the factory, should be a credit to accumulated depreciation, and the cash is just for everything else. So 80 plus 8 plus 20 plus 15. So I got credits for 123,000, and those are just my cash costs, and the depreciation go to accumulated depreciation. Okay, so those are what I call my original entries. Now let's go ahead and post those entries. Now it's basically, you need to post the debits. The credits are either cash or accumulated depreciation. I don't care about those accounts right now. Let's go ahead and post the debits. Okay, so the first debit here, the first debit is going to be the raw materials, and that is going to be for 124,000. Those are the raw materials that were purchased. Okay, and so we've taken care of that debit right there. Then let's go ahead and we paid payroll. The direct labor payroll was 80,000. And notice this is entry number 2. Notice the manufacturing overhead. I'm going to put it right at the very bottom here. But it is part of manufacturing overhead is indirect labor. So that's right there. Indirect labor is your manufacturing overhead. Okay, and then finally, that takes care of that entry. And then I've got, for manufacturing overhead, I've got 3 entries. I've got 5 entries right here just for different types of miscellaneous manufacturing overhead. That is for 80,000 for rent of the factory, 8,000 for utilities. We've got 20,000 factory equipment. We've got depreciation on the factory for 30. We've got security on the factory for 15,000. Okay, now we're almost finished with that, but not quite yet. Okay, now remember, so those were my original entries, and they've all been posted, and it looks like I've got all the debits there. Okay, now in the next entries, what we're going to do is we're going to flow to the right, and I've got all the debits. I've got the materials I purchased, my direct labor, I've got my manufacturing overhead. This one right here is indirect labor, and by the way, number 4 is going to be indirect materials that I put in there. I have yet to do it, but what I'm going to do is I'm going to shrink myself down here so you can is now that I've got all my debits in there, I'm recognizing my costs. I'm going to transfer them onto the assembly line, and the assembly line is going to show direct materials, direct labor, and manufacturing overhead. And so in entries 4, 5, and 6, I'm going to transfer those costs, my direct materials, out of raw materials in a sense, but I'm going to transfer direct materials, direct labor, and manufacturing overhead, my 3 types of manufacturing costs over on the assembly line. Okay, let's start. So I call these transfer entries. So these next 4, 5, and 6 are to transfer costs. There's a description here. Internal entries to transfer costs over to work in process. Okay, so here's what I'm going to do is I'm going to have raw materials. I'm going to debit work in process, and the debit to work in process is going to be for the amount, I'm going to put here, this is going to be for the amount of direct materials. Okay, so if you remember, the amount of direct materials that I used, if you go up here to the statement of cost of goods manufactured, 120,500 were the amount of direct materials that I used. And then the debit, you'll remember that the amount of indirect materials I used, which, remember, indirect materials are part of manufacturing overhead, the amount of indirect materials that I used were right here. I'll just use this 1,500 right there. Okay, and then finally, the total is the amount that you're going to take. The total is the amount that you're going to transfer from raw materials into work in process, which is 120,000 plus 1,500. By the way, that's equal to, you'll notice there's a lot of correspondence here, that's equal to the 122,000 total raw materials used in production. Okay, so here's what's going to happen in entry 4. Okay, you notice you have a credit to raw materials for 122. I'm going to go ahead and do that credit right there. So there's a credit to raw materials here for 122. There is going to be a debit to, that's entry number 4, see that? A debit to work in process for the direct materials part for 120,500, which, by the way, is equal to, see if we can find it here, is equal to the 120,500 that that I put into production up on the statement of cost of goods manufactured. And then finally, there's going to be a debit, and this is the final debit. This is the final debit. There's going to be a debit to raw material manufacturing overhead for that 1,500 right there. So I got $209,000 in manufacturing overhead right there. I want to take that out here for a second. Okay, so I've got 209,000 in manufacturing overhead, and let's just see for a second here. That's equal to that number right there. So I want you to just look at this. I've got, up on my statement of cost of goods manufactured, I was saying that I put direct materials into production of 120,500, direct labor of 80, and actual manufacturing overhead of 209,000. Well, I'm not quite there yet, but I've got 80 is going to be my direct labor, 100 and so wait a minute. Let's do entry 5. Entry 5 is just the transfer of direct labor. So in entry 5, let's go ahead and do this. Finish these and I'll talk about that. My direct labor is, I'm going to debit work in process for the amount of direct labor up here for 80,000. And I'm going to credit direct labor for 80,000. So notice I've got debits to work in process for 120,500. That's for my direct materials and my direct labor. And I'll even put, just sort of mark it here, that's for direct labor. And then finally, a manufacturing overhead. And here's where I do the estimate. And here's where I'm going to do the estimate of manufacturing overhead. I'm going to put applied here. You notice it's a very simple entry. Okay, and manufacturing overhead is applied because we estimate it because you've got all these overhead costs here. You've got all these overhead costs here. Everything from rent to utilities to maintenance to security alarms to whatever. And it's very hard to estimate those during the period. So what we're going to do is we estimate them, and the amount that we estimate, by the way, is going to be this 180,000. We're saying that it's applied or estimated on the basis of 2 times direct labor dollars. And you can come up with different ways to estimate. You can do it on the basis of direct labor hours, some relationship there, or dollars. Got to be some logical relationship. But we're just assuming here that the applied manufacturing overhead is going to be $180,000 right here. Okay, so yeah, maybe $10,000 off this example, but you'll just have to live with it. Okay, and we'll find it later after you do this. Okay, so my direct labor is 80,000. So what I'm going to do is I'm going to debit work in process. This debit to work in process is for, let's see here for a second, debit to work in process is going to be for, going up here, not my total overhead, but my applied overhead for 180,000 and $180,000 there also. Okay, now I'm going to go ahead and post these entries and you'll see what happens. Basically what I'm doing is I'm transferring from the raw materials, direct labor, and manufacturing overhead accounts into work in process. Now, I've already done, I believe, entry number 4, where I debited work in process for 120,500. I debited manufacturing overhead for indirect materials for 1,500, and then I credited raw materials for 122. Now in entry 5, what I'm going to do is I'm going to credit my direct labor. This is a type of payroll account, by the way. I'm going to credit direct labor for 80, and I'm going to debit direct labor. I'm going to debit work in process for direct labor for 80 also. So this is that debit right there. And then for manufacturing overhead, I'm going to go ahead and post my applied overhead. So my applied overhead is going to be, there's a debit to 180 right there. And then there's going to be a credit to manufacturing overhead right here, entry 6, for the applied overhead. So what we've got is and you see the label I put here, right here. These are your total manufacturing costs, but they're based on applied overhead, not the actual overhead. And the difference between the two, notice the difference between the two is right here. We applied 180,000, our actual is 29,000, so that means we underapplied the overhead, which means we underestimated the overhead. We didn't put enough overhead into the work in process account. Okay, and so now we're ready to make our final transfer entries. And we've got some internal, a couple more internal entries to do. Number 7, we're going to make an entry to transfer cost of goods manufactured to, which is the cost of goods that we manufactured, to the finished goods inventory. So this is basically the goods are coming off the assembly line and going into finished goods inventory. We'll do that entry, and then we'll sell some goods and recognize gross profit. Okay, so entry number 7, and I'm going to actually work backwards through these accounts here. Entry number 7 is basically the transfer from work in process over to finished goods inventory. Now this is kind of a calculated entry. So what I'm saying by that is if you take your beginning inventory and you add your 3 costs that you put into here and subtract out the 32,000, that means you got a transfer going over of 358,500. Okay, so we've got a credit to work in process for 358,500, and we're going to have a debit to finished goods inventory of 358,500. Now I'm just going to go ahead and work those backwards. I had to work that one backwards. So I'm going to go ahead and say, there's your debit. There's your debit in finished goods inventory for 358,500. And there's your credit to work in process for 358,500. So that's just a transfer entry. Now the final thing you can do is, so what's happened here is that you've got 3 types of accounts, and you've added all your production costs, your direct materials, your direct labor, and your manufacturing overhead, and then the cost of goods based on applied overhead is 358,500 that you put in over here. And so you've taken the cost of your goods manufactured, finished, is transferred from your assembly line into your finished goods inventory. Now the final thing we have to do is sell the goods. So let's see what we get here. We've got 2 entries. We've got 2 more things to do. Sell the goods, which is going to be a transfer from finished goods over to cost of goods sold. And the final thing we're going to do is we're going to close out. We're going to readjust our manufacturing overhead to make up for the fact that we underapplied overhead. And I'm going to put here, this is under. I'm just going to put the word under applied because we had $209,000 in cost, but only applied 180. So somewhere we've got to add that $29,000 in actual cost. So let's go ahead and sell some goods first. Okay, this first one is not even the cost system. We have to recognize that we make a profit. So what we're going to do is we are going to go all the way up here to the income statement. And you know from the income statement, I went way past the income statement. I know what I'm doing here. Okay, is the income statement is $700,000 revenue, $700,000 whatever. Then our cost of goods sold is going to be, we're going to actually work backwards through the finished goods inventory account to get our cost of goods sold. Our cost of goods sold is going to be transferred from finished goods inventory down cost of goods sold right here. Okay, so here's what we got. We've got, if you just take your beginning balance, finished goods, add in your debit, your cost of goods manufactured, which by the way is described up here. And so let's do this again. Take your beginning balance, add in your cost of goods manufactured, or cost of goods manufactured, and subtract out your ending balance. That should give you the amount that you transfer over to cost of goods sold, and that amount is $252,500. Okay, so in entry 8, you have a credit to finished goods inventory of 252,500 and a debit to cost of goods sold of 252,500. And just for posterity's sake, I'll go ahead and make sure that I've journalized this entry. So we will do that, and we will make sure that we journalize this one. And we're just about finished here. The final thing here, though, is that couple of extra points is that we need to, I'm going to say, adjust for underapplied MOH. And there's various ways to do this. MOG, no, MOH. There's various ways to do this. The easiest way to do it is just to close any manufacturing overhead cost of goods sold. Some people actually close it, distribute it over the inventories and the cost of goods sold. The easiest thing to do is just close it at the cost of goods sold for our purposes. So let's see what we got here. We know that we underapplied overhead by 29,000. So what we're going to do is take this balance. We're going to go ahead and credit manufacturing overhead for 29,000, and then we're going to increase our cost of goods sold by $29,000 also. And that seems fair because we didn't put in, we had 209 total costs. We only put in 180. So let's go ahead. So somewhere the actual costs have to come out. So what I'm going to do is I'm going to go ahead and debit in entry 9 cost of goods sold manufacturing overhead for 29,000, which makes the balance 0. And then I'm going to credit cost of goods, manufacturing over 29, and then I'm going to debit a cost of goods sold for 29,000, which is going to give me a final cost of goods sold of 252 plus 29, or 281.5 is going to be my final cost of goods sold there, based on actual costs. And then let me book this, journalize this entry, and then we'll finally go up and see a couple things. See how this turned out. I think it may have turned out okay. There's always discrepancies in this stuff. Okay, so what we're going to do is debit cost of goods sold for that amount, and then we'll just go ahead and credit manufacturing overhead for the same amount. Okay, just a couple things to point out. This transfer here, this $358,500 transfer, is the cost of goods manufactured based on applied overhead. Okay, and so if you look at that 358 and compare that to that's 358,000, and compare that to the cost of goods manufactured up here. So down beneath it was 358,500. Let's see. I'm maybe a little bit off my assumptions there. Okay. Anyway, so this 358.5 is the cost of goods manufactured that came over here. But let's look at the ending balances. First of all, the ending balance in work in process is 32,000. If you come up here to your job cost cards, I'm assuming that job 3 is your ending balance. So what we're saying is that this job was finished. This job was started last period and finished. This job was finished. And this job here was finished. And okay, and so we're saying that the only job that was not finished was job 3 here, and that's equal to your balance in the ending work in process account. So this would be job 3. Okay, now if you total up all these finished jobs, job 0 plus job 1 plus job 2, they give you 358,500, which is equal to the transfer from work in process over to finished goods. So this transfer here, these are jobs 0, 1, and 2. So that works out pretty well right there. Let's just get M out of here. That works out. So that's working out, corresponds with the job cost cards. Your cost of goods sold after adjustment was 281,500 in the T account. And if I come up here to the income statement, let's see down here, the income statement. There's your 281,500 right there. So it looks like everything turned out. There's other ways to do this, and I think there's one little discrepancy up here, but there's a lot of discrepancies. But the main thing is that your job cost cards did correspond with the 358. This was the sum of these is your cost of goods manufactured. Your ending inventory is number 3 right there. Okay, so I am going to ask that you complete this sheet the way I did it. It's probably a hard assignment, but I'll tell you, by doing this, you're going to get a lot more than you did out of the book. So anyway, so I'll go ahead and put up this video, and then I'll send you your assignment later tonight. Thank you very much. I'll stop recording right now.